All right. Hey, everyone. Mark here. Mark P. Markets. Thank you for joining me for another Bitcoin video analysis. We have some interesting things to talk about here today. Okay. So again, sorry about the delay, these technical things. But anyway, let's get this thing started. What is this telling me? Oh, now TradingView is giving me a hard time. Okay. So I guess I'm not streaming on TradingView. All right. I thought I had set that up and I guess it's not working. I don't understand that one. Yeah, I'm not streaming over there. Okay, anyway, I'm not going to be able to fix that now. Okay, anyway. All right, so let's get this stream started, shall we? Let me just run this up real quick. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, real quick, if you're new to my stream, welcome. Here's how it works. First thing that I'm going to do is I'm going to go over the economic calendar. Okay, then because we want to make sure we know what events are coming out during the week ahead, and we can be prepared to mitigate risk in those situations. Second, we're going to go over this Bitcoin situation. Now, the title of today's stream is This Week's Trade Plan. Basically, what we're going to be looking at, for the week, like what potential scenarios we can face, both long and short. I'm going to address some day trade time frames as well. Okay, so it's important if you're trying to figure out what to do with this now. Okay, and then after that, we can talk about some trade scanner trades. I mean, earlier today, the trade scanner called Pfizer, the stock Pfizer, called it short. So we could take a quick look at that. Also, the trade scanner called Bitcoin long, like 2 weeks ago on the trade scanner, that was taken out today for a profit. It also called Polygon long, like a week ago. And these trades were tricky. That was also taken out today as a profit as a result of this Bitcoin move. So we can address that as well. I mean, the trade scanner does well in these situations, right? And we can talk about why. The whole key to using something like the trade scanner, by the way, is basically using it to help you get into trades, but then you managing the trade after that. And that's why I want to address that Bitcoin trade, because after the fact, yeah, it looks great. It was taken out at 53, whatever the price was, 53.5 or something like that. But it was tricky and not easy to hold on to, right? So some people may have gotten out early because of the conflicting signals, and I want to address that. Okay, now, if you want to share what city or what country you're from, that's always a fun fact. I'm streaming from the greater New York City area, and we have Tino. Hey, Tino, ¿cómo está? Mucho gusto. No, I always say that. ¿Cómo está? ¿Todo bien? I have to come up with some more conversational Spanish. But anyway, all right, cool. Good to see you. Cuánto tiempo sin verte? No, that's not true. I've seen you a week ago, so that's not true. Anyway, okay, cool. From Mexico. So yeah, if you want we have Steen from Belgium, of course. All right, we have Raul. Raul, I don't know where you're from, but that's cool. Anyway, Alex, good to see you from Romania. That I remember. All right, anyway. So yeah, I'm not on TradingView today. It's not like anyone watches me over there anyway. But I wrote my article yesterday, and I talked about this 52K breakout on Bitcoin. All right, so before we get into this chart, just a couple other things I just have to mention. And before we get into the economic calendar, you'll notice in the description that I have 2 affiliate links. Okay, I could speak very freely here since I'm not on TradingView today. And in those affiliate links, right, you'll see one from Bybit, one from MEXC. If you're looking for an exchange, you're looking for a place to trade or whatever, consider one of these affiliate links. Now, Steen gets a small cut of your trade when you fund an account. All right, you do your KYC, you fund an account, and you place trades. He will get a small cut. Now, that goes a long way into helping him support the community. All this great work that we've seen us produce, I mean, all these great things that we've come up with in recent time is a result of a lot of his hard work. Okay, so thank him for that. Also, he hasn't been feeling well. So Steen, I hope you're feeling better. Anyway, you can help him out by opening an account there and placing trades, and he will get a small cut. Okay, and it helps to support the community. The other thing I want to mention is this week on Thursday, I'm going to have my February student meeting. That's February the 29th. Okay, Thursday at 3:30 p.m. Yeah, 3:30 p.m. Eastern time. I have not sent out the invitation for that yet. Okay, now I'm going to do an open house this week which means it's available to everyone for free. Normally, these meetings are for students or members of my community only, okay? So if you'd like to join this meeting, it's an opportunity to ask me questions about specific things. The meeting is usually an hour long. Now, the topic or the subject matter that I'm going to cover this week, I'm going to talk about algos in particular, not just my algo. I'm going to talk about algos in general and how to incorporate an algo into your own trade strategy, your own personal strategy, because algos have their limitations. And one of the problems that many people come across with these algos, because there are many types. You go to one of these exchanges, they have their own algos. You go to a MetaTrader 5 community, they have their algos, which, there's many of them for sale, this and that. And they all claim to have like an 80 or 90% win rate. But when you buy this thing or you pay for it, then the reality is something else, right? So I'm going to talk about that and why that is and how you can use these tools as a way to enhance your performance, okay? So that's the subject matter. Now, if you'd like to receive an invitation for that, I have not sent them out yet. They're going to go out on Wednesday. The invitations are going to go out on Wednesday, right? So the meeting's on Thursday. You guys clear on that? I'm going to send out the invitation on Wednesday. So to get on that invitation, you have to just go to marketsignalspro.com. There's a link in the description. Sign up for the Trade of the Week email. That's free. Okay, you'll get an email every time there's a Trade of the Week. But I'm going to email the invitation to everyone on that email list, right? So if you'd like to get to that meeting, you'll receive the invitation by email. You have to register for it. It's free. And then you'll get the link and all that stuff, and you can be part of the meeting as well. All right, so again, when is my meeting? Just want to make sure you guys are listening. Anyone want to tell me? When is my meeting? My student meeting for this month? When is it? Who wants to tell me? Who wants to tell me? I know I have to wait like 20 seconds. Okay. Nope. You weren't listening, Alex. The meeting is on Thursday. That's it. Tino got it. Tino from Mexico. It's on Thursday at 3:30 p.m. Eastern time. Okay. So again, you guys can join that. Just sign up for the email and you'll get an invitation. On Wednesday, the invitation goes out early. It's going to go out very early. So you guys should get it. Okay, cool. Okay. That's why I asked. All right. So let's move along here and let's get into the next thing. Also, by the way, if you want to press the buy button, the boost button or the like button on YouTube, you subscribe to the channel. That's always helpful. You can also check me out on Twitter. Check out my TradingView article, right? Because I talked about this scenario that we're seeing right now. Okay. You're also eating. All right. No problem. No problem. Can't do everything at the same time. I get it. All right. So let's get into the economic calendar, shall we? Now, I'm going to test you guys again before we get into the chart. Can anyone tell me what events are on the economic calendar this week that are meaningful? Anyone want to take a guess? Let's see what you guys come up with. I'll wait a few seconds. What economic events are meaningful? Remember, you should always check the economic calendar every week, but not everything is going to be important. There are only a few items that we really look for throughout the month as far as economic events go, because they're scheduled at the same time every month. So we want to be aware of these. We want to know what time they come out so that we don't get caught in anything. This is especially important if you day trade. Okay? Tino says nothing. All right. Anyone else want to take a guess? Anything on Friday? You guys? Nothing, Steen says. Okay. Okay, you guys are pretty good. So you guys aren't getting fooled by all the minor stuff. Okay. It's not that these minor stuff are not important. It's just they don't have a major effect on global markets, right? They don't move the dollar in any major way. So we're looking for non-farm payrolls. Now, it's tricky because Friday is what? The first of the month, right? It's the 1st of March, is it not? Where's non-farm payrolls? So sometimes it gets tricky that way. I guess non-farm payrolls is going to be the next week. But non-farm payrolls, any FOMC meeting, the CPI report, usually, and any type of anything that has to do with Chairman Powell, like Chairman Powell testimonies, things like that can have a major effect on the market, right? So we want to be aware of those things. Okay, cool. So let's move along and let's get into this chart situation. So now today is all about the game plan, right? What is the trade plan for the coming week? Let me make my chart bigger so you guys can see what's going on here. Oh, that's the wrong button. You don't want me bigger, that's for sure. All right. So let's take a look at this chart. Now, if you looked at my Trading View article, which I can't believe these guys, I can't believe this thing is not working today. You know, I spend so much time setting that up, and I know I set it up correctly. It's not my fault. All right. Anyway, no, let me stop complaining. So let's talk about this situation, and let's talk about what I shared yesterday. Right. So before we get into the game plan, over the previous few weeks, right, we went into this consolidation here. Let me just highlight it. We went into this little consolidation. We broke this rectangle here. This rectangle, in case you don't know, represents the high probability reversal zone, right? So I was looking for bearish reversals in that zone. And when you don't get one, when the market just blows through that zone like it has here, then that zone is no longer the high probability reversal zone. I keep it on the chart because I want to see how price behaves in that zone, because what I'm looking for is we blow through, right? And then we give it back right away, right? One of those things. But the market never gave us that either. Instead, the market lingers above the zone, which is usually a sign of strength, okay? So that gives you some very important information. For one, you should be very careful with shorts, okay? Now, as you know, I don't short Bitcoin, but in those situations, you have to be very careful. Sure, there's plenty of intraday selling opportunities, right, around this high, which was what, 52 something, 53, whatever, 53 even, just around that 53, high 52s. Sure, there's some intraday movements in there. You could see it by the tails, right? Let me make that big. All these little tails on the chart, you can see that. But when I'm writing my article and I'm usually doing these streams, I'm talking about the swing trade perspective, right? So the swing trade perspective is a much larger magnitude. And what we're looking for we're looking for two things primarily: the general trend, and we're looking for the support and resistance levels that can give us some idea of what to anticipate next, right? So in this case, if you look at my charts from a few weeks ago, right, I had this area right here labeled with a question mark and the letter B, because I thought this might be the B wave here, right? I thought maybe this may have been wave 5 completion, but it wasn't. This was wave 4 completion, but you don't know that until after you get a move like this. That's a limitation with wave counts, and I had to relabel, right? That's called adjusting. There's no way around that. Now, I was still right in knowing that this was a high probability place for a pullback, all right, but my wave count had to be adjusted. This was not an A wave, or basically this was an ABC, but it completed the wave 4, okay? This entire wave 4 situation, right? This is like basically a wave 4, and then we got this wave 5, all right? This broader wave 5. Now, that takes us to where we are now. And in this broader wave 5, we were able to count 4 waves. That's why I had the question mark in wave 4 here. And I was anticipating the pullback, all right, and then the wave 5, right? Now, I want to point something out. This pullback, my ideal scenario, of course, the market never delivered my ideal scenario, which was a pullback to 48K. We never got that, right? But I want you to understand something. This market could have given us that. This market also could have pulled back this far, right? And basically near wave 1, it could have fooled around a bit, right? It wouldn't pull back there in a straight line, but it could have given us one of these jumbly situations, like one of these, right? Pulling all the way back there, and you realize that would still be a wave 4, and we'd still be anticipating a wave 5, which means the structure would still be considered bullish, right? That's very important to understand. But anyway, the market never gave us those scenarios. The market wouldn't even touch 48K. When supports hold like that, right? 50K was the level that was in play over the recent week. And when levels like that hold, and they just refuse to break, you can't be bearish when you see that. Like, you just can't be bearish. It's like, man, this thing will not break. It won't even test one of the broader supports. It's strong. So again, how does that help us? Don't be shorting this thing with any high expectations. Number one, anyone that's shorting this thinking, oh, it'll pull back to 20K or whatever, anyone thinking that is taking an enormous risk on the short side, because if wave 4 completes, right, wherever it decides to complete, we're anticipating a wave higher. And I prepared my community for that. I've been writing about it on TradingView, right? I had to change my wave count 2 weeks ago, and here we are. Now, the key point, one of the key points that I made in my article yesterday was, if we break 52K to the upside, if we get the breakout, wave 5 is in play. And that is what we got overnight. Now, that was a very tricky trade to take that. Now, I was not calling saying, okay, everyone get long at 52K. I was not saying that. I was saying, if we don't break 50K and instead we take out 52K, we're likely to see a squeeze to 55K, somewhere in that area. Today's high so far is 54,969. Okay, that's as high as we made it so far. Now, we got that squeeze pretty quick. This can really be confusing for people. They're going to feel like they're missing out, what to do now, this and that. Some people may even short this. It's still this is not a short, not yet. Now, how do you play something like this? I just want to mention that real quick. Taking the breakout on 52K, that's not an easy trade to take, because it can still fake out on you hard, right? You have to at some point decide that you want to take a chance, right? You have to take this risk. You're never going to get precision. The best way to play something like that as a swing trade is, you have your normal swing trade plan, but you reduce your size in case you get the fake out, right? You reduce your size. If you get the breakout, beautiful, you're in, right? And so you make less, but at least you got a piece of the action. And if it doesn't work out and you get caught in the fake out, you just blow it out as soon as possible and take the smaller loss. But the loss should naturally be smaller because you have smaller size on. That's how I would play that. I'm not long this, by the way. The trade scanner had this thing long for 2 weeks, and we're going to talk about that here in a minute. But that's how I would go toward playing a breakout. I was waiting for my ideal scenario. The market just doesn't want to deliver. All right, no problem. I'm going to miss trades like this. It doesn't mean you have to. Now, another thing I want to mention about missing trades and fear of missing out, which seems to affect a lot of people. You can afford, just think about it this way. This is a mindset game, right? You can afford to miss millions of trades, millions of them, right? If you miss every profit potential trade for a month, you miss them all, your account still stays the same. But if you chase everyone and you try to get into everyone, now you expose yourself to all the losing trades. And those you can't take. You can only take a limited amount of those before you wipe out your account, right? So it's okay to miss moves. There are always more moves. What your goal should be is to protect your capital, right? And that's what I hope to instill in people, protecting their capital, not feeling emotional about this, but like, all right, I missed it, whatever, it sucks. But there will be more opportunities. Also, if you're someone that if you need that constant opportunity type of thing, then you have to look at the smaller time frames, day trades, right? Because there are lots of opportunities on there. There are also a lot of bad trades on there because there's a lot of noise, right? So you have to expect less in those situations. Now, so that's pretty much like the overview, right? So this thing is in a wave 5, and now it's our goal to try to count 5 little subwaves inside of this, which, we don't really have anything to count yet. We can look at a smaller time frame. Let's go to a 4-hour chart. Okay, here's the 4-hour chart. So when we look at this, right, we can say that basically this is the wave 1, right? 2, this is clearly 3. 3s typically look like this. They're very dramatic, right? And they're very big, right? So now we're in a little mini wave 4 situation, right? Mini wave 4 can go all the way back to here and still be bullish, right? Again, it's the same impulse structure. It's just on a smaller time frame, right? But we're looking for basically pullback and then one more leg, right? And maybe we get that leg here. That is your intraday game plan. It's very simple, but it's hard to wait for because look, we have a bearish pin bar. Now I'm still talking on the swing trade time frame. You can take what are like intraday swing trades where you get the signal on the smaller time frame, like the trade scanner delivers, and then maybe you have to hold that trade for a day or two or something like that, and that would be considered a swing trade compared to a day trade where you're in and out like in 30 minutes or 5 minutes or 10 minutes. Does that make sense? Okay, so you guys following me so far? So that's scenario A. All right. Looking for a minor pullback, a convenient level will be here, right? Because look at all of this old resistance, which is now new support in the high 52s, close to 53. That can pull back a little, maybe 52.5, something like that. But that would be ideal. And that's something that shouldn't take too long to wait for, maybe a day, right? And there may be another opportunity during the week. So you want to keep your eye out for that. I will be looking for that as well to see if I can spot something like that and share with the community if it's clear enough and I happen to see it while it still makes sense, right? So that's the first plan. Now, the other thing is, what about the pullback, right? We have a bearish pin bar developing here. This thing closes what in a couple hours? This candle closes, or does this thing close at? I think this thing closes at 5 o'clock. I'm not sure exactly what time. What time this thing open? Let's see. Oh, 7 o'clock, right? 7 o'clock, what I guess would be the time that this thing closes. 7 o'clock Eastern time, my time. So when this candle closes, right, if it takes out the low of this candle, that's 54,316. That's a sell signal. Now, what do you do with that? Is that something we should be aggressively shorting? That's going to depend on you. And if you do it, it should only be a day trade, because if you're wrong, your stop should be relatively tight. A day trade stop is maybe 50 points, maybe 100 points, something like that. You should not be losing 500 points on a day trade. You should be looking to make maybe 200 or 300 points. Right now, on a short, something like that, if you take that, which again is extremely aggressive, you're hoping that this thing can pull back to here, but you should expect less. Right? So if you're risking, let's just say you're risking 100 points. If you can get 150 to 200 points, which would put that thing probably somewhere around here. What is this price again? 53.15, and the low of that is 54. So that's almost 1,000 points. 53,015, right? So 53 even. So that's about 1,300 points. So that would be a lot to ask for, even though it could probably do it. After such a move like this, it's a lot to ask for. So if you just look for half of something like that, or even a quarter, that's within reason for an aggressive day trade short. Okay. Now I'm not sitting here telling people, oh, you should just short this thing. I would not short this thing. But if you trade the Bitcoin futures, that's where you would do it, obviously, because you can short that very easily. You can short the futures contracts very easily, or the other, all these exchanges like BitGet and all these other ones, Coinbase, Bybit, all of them. They have futures markets, right? Basically, you trade against them. There are no market makers in those derivative markets. It's the exchange, and that's what you'd be looking for. Does that make sense? So let's see what you guys are saying here in the comments. So, okay. I wish I was as cool and collected as you. I'm panicking. Okay. Itching to go short. Well, so I just addressed your short situation. Never feel that way. Look, I get anxious at times. There's no question. I get, especially, I day trade. But I don't day trade this thing. I day trade like NASDAQ and S&P and stuff like that. And there are times, those markets can be wild, especially the NASDAQ. And there are times that I can get anxious. But the thing is, I understand the behavior well enough now, because I've been doing this long enough to understand like what is possible and what is less possible. See, anything is possible. Like a market, like let's say you're short and this thing just goes berserk. It goes to 60K. That's possible, but it's a lower probability, right? I would not be betting on something like that, right? Running to 60K like in one candle. I think we can agree that's a low probability. But you want to narrow into what is possible. Can this thing run to 55K? Yeah. It can do that, right? In fact, that's what I have this resistance up in here at 56K. It can do that over the next day or so. So that's a much more realistic risk. If you short this thing, you certainly, in the next candle, looks like this, you definitely should not be in that thing. And you should definitely not add to the position if it looks like that, because while it may pull back eventually, you may get margined out before it pulls back. I've been in that situation many times where I was right, but I could not hold on to the position and I get knocked out of the market. And then what? The market does what I thought it was going to do, or what I was anticipating, right? So it's a very hard game to play, but that's the random nature of the market. So you're better off like just, you have to have your plan like I laid out here. We talked about a long plan. We talked about a short plan. I'm showing you this on a 4-hour chart. Because of this type of movement, I mean, you could work on this chart for both sides, right? Does that make sense, you guys? Now, you guys have any questions about that? Let's take a look at a smaller time frame, right? Let's go to like an hourly. So I'm going to go on an hourly chart, right? Now, it doesn't really make much. It looks pretty much the same, right? Except we're just looking at more detail here. The levels haven't changed, but what we're paying attention to is the candle formation. Now, this candle is an hourly candle. It's a beautiful bearish pin bar, right? Now, this candle only has about a little over 15 minutes before it closes. Now, you get that hourly close, it takes out that low, you may have yourself a little mini day trade in there. Short, that may be worth 100 points, right? Can this thing easily pull back to like over here, like this level right here? Yes, it can easily pull back there. That's just a normal little healthy pullback, right? Before it goes for its next leg higher. It can easily pull back. What price is that? That's like what? 53 half? Yeah, 53,546, that area right there. It can easily do that, okay? It's within reason. So that's what you would be anticipating, right? If you want to take half of that and say, okay, you know what? I'll look for this here. That's even more reasonable for this thing to pull back. But the whole thing is that's all you're looking for. And if you get that, great, you get out. If it goes further, who cares? Okay? Because you're looking for the long anyway. Everyone is going to be looking for the long. So keep that in mind. You can play both sides, but you just have to, your expectations cannot be the same for both sides. The long should have greater expectations than the short in this type of situation, because this is very strong momentum. And believe me, everyone's going to be looking for any little pullback to buy this thing. All right. Because we don't have any like major resistances here. The next one is basically 55, 56K. And that's where, this is where your higher probability short will be, something like that, where maybe you can get more out of the short. But even then, it's still aggressive because it's counter trend. Does that make sense? All right, let's go back to the daily chart. All right. So, any questions? Any questions? Okay. You guys can still hear me, right? Any questions? All right, let's take a look now. If I don't have any questions, Steen, if you can you share the Bitcoin trade that was taken out for a profit today? The Matic trade that was also taken out today. By the way, you can see these trades. For those of you that are wondering, you could see the track record if you just look at the links in the description. There's a track record link, and that takes you to all the tables that track all the trades that the bot takes. So you see the trade history, you see the day that it was called, you see the result, okay? And they're not all perfect, right? You see there's plenty of red trades in there. The thing is, if you learn how to manage the bot, you could do better than that. And that's the point that I'm going to make here. So there's the Bitcoin trade. Thanks, Steen. Can you share the Matic trade? And can you share the trade of the week, which was the Pfizer trade short today? Okay. And I put out an article. Steen made this nice program for me where I can send out notes. And I've been sharing a lot of notes. Like I try to get one out, by near the market open. And I sent out one about the S&P earlier today, and the S&P had this higher low. And I said, be very careful with stock shorts. And what does a trade scanner pump out? A stock short. So we'll take a look at that. Okay. And Pfizer is also not just some little nonsense penny stock. Pfizer is a heavyweight. And so we'll take a look at that. Okay. But it's also a pharmaceutical stock, and they tend to have their own behavior at times. It's important to understand the sector that you're dealing with. All right. So that's the Bitcoin trade. Yeah. So Steen, if you can share the Matic trade and the Pfizer. So let's take a look at Bitcoin. Let's take a look at this Bitcoin trade. Now, this was called, as you can see, on the 18th of February. So it was like 2 weeks ago. And it was called like trade of the week. This was the trade of the week. All right. And let's take a look here at the let's just put the prices in here. And let's go back to the 4-hour chart, because that's the primary time frame that the bot uses. Right? Now, understand something about the bot. The bot is a trend following system. It follows a trend following system, right? And it looks for a reversal. It looks for a pullback and then a reversal confirmation on the side of the trend. That's what it does. And it looks for the same trade every time. Now, let me just erase some of these lines here, right? So we can get a little more clarity. And the entry price, 51,631. Let's put it in here. Let's go back to the date. So that was like back here somewhere. Yeah, so that's the 17th. This is the 18th, right around here. Okay. So 51,631. It was right around this candle right here. I remember this. Now, that's where it called it long, back here. Okay. That's where it called it long, back on that day. Now, look at this. Now, it's been all over the place since then. Let's move some of these lines out of the way. And let's look at the take profit and the stop. So the stop on this thing is 54.12. Here, so let me put that on here. Right around here, 54.12. 50,412. So that was basically like the range low. That's actually a little higher than the stop, but that's good enough, right? It was around there, right? The long was called here, basically. And the take profit was at 53,459. Okay. Up in here. That was the take profit, which it was taken out today. That's when this thing was taken out, right? Up in here. Now, if you want to try out the trade scanner, there's a free trial for 1 week. Now, the free trial is only available to monthly subscribers. So like if you decide you want like the yearly package or something, then you would have to try it out for the month first, cancel that one, and then buy the yearly. But the 1 week free trial, let's just be clear, the 1 week free trial is only for monthly. That's stated on the website as well. Only for monthly subscribers. Okay, so you sign up, you get 1 week for free, you get all these signals in your email, and then if you don't like it, you can cancel anytime by going to your user dashboard and just canceling. It's very easy. I have not had to manually cancel for anyone. Everyone is able to find it themselves. Okay, so anyway, so that's available. It's 1 week long. Now, this is where it called it long, and this is what I want to point out. Look at all of this noise. You had to sit in this thing for 2 weeks from here to here. You had to sit in this thing, okay, and watch this thing gyrate until today. So this is what I want to point out. When it called it long over here, it was favorable over there like the next day, but then it gave conflicting signals, right? So this could have been an early exit for you. You may have put your stop to break even. You would have broken even. Okay. And then you would have watched this thing gyrate all over the place. In fact, I had mentioned, I made an observation about a pin bar. I think that pin bar was this one, which completely failed. Okay. And went into this range low area, the 50K area, which refused to break. Right. But if you had stayed in this thing, obviously it never stopped out, right? The stop actually was a little lower. If it had stopped out, the robot would have reported that. This thing never actually stopped out. But you would have had to just basically set and forget and hope for the best, right? Because there's conflicting signals all over the place here. So you could have made a little profit. Most likely you would have broken even on this thing, right? Or you just said, you know what, I'm stuck in this thing. I'll just let it go to the stop. That's the whole point of having a stop. It's like, well, I don't know where to get out. So the robot says that's where you should get out. And that's where the stop is. And if you manage to hold through all that, you got your take profit. That is hard to sit through if you're watching this thing on any time frame. So what do? Even though this thing went to the take profit, and we can see that after the fact, it's better to mitigate the risk. It's better to move your stop to break even when you have the opportunity. You're going to get stopped out. This basically, if you had done that, this would have been a break even trade instead of a take profit trade. Okay. It would have been a break even trade. But that's okay, because if you're mitigating the risk, right, there are many times when you get these conflicting signals where you had a little profit and the thing goes to the stop and gets stopped out, right? And then you basically could have mitigated that risk. That was one stop that you could have basically happened to avoid, right? And if you can do that multiple times, then you're erasing these losing trades. And if you're capturing ones that go straight to the take profit, now you're accumulating those winners, right? So do you understand that situation here with Bitcoin? So yeah, it looks beautiful after the fact. And there were other times to get in, but the bot never called these, right? So there were other times because it just never fit the criteria. And it was in that Bitcoin trade long the whole time. Now, it's better to take those break evens, or to maybe it was a small profit. It's better to take those than try to go for the full profit. It's better to take those than get stopped out, right? Because the idea, what's happening if you do that over time, managing the trade, is you're reducing your losing trades. So let's just say your average losing trade is $100 and you reduce that to $50, right? But your average winning trade happens to be $150 or something like that. If your average losing trade is 50 and your average winning trade is 150, that's 3-to-1. Over time, you will accumulate money into your account, right? If you're managing to maintain that ratio, and that's how you do it. Okay. Now, let's take a quick look here at Matic, because this was another one. In fact, I told people you should probably get out of this one. I told people, let's go to Matic, all right, which is Polygon. Matic USD. Right now, Matic was called on the 22nd. Right, the robot called this on the 22nd. By the way, the robot sends these out by email. The bot sends them out by email, but you can also get the trades in the server. We have channels in the server where the trades pop up there as well. You could thank Steen for all that. Now, this thing was called around here. I remember this. All right, 22nd is right around here. It was called long, like right around here somewhere. Okay, what's the price on that thing? $94.90. Okay, so actually that's $96.20. That's lower. So let me put the stop in first. $87.36 is the stop. All right. That's all. The stop is all the way over here. Okay, that's where the stop was. You knew that in advance. The entry was $94.90. Right there. That's the entry. And if you had taken that entry, right, the take profit on this thing was 106, right? 106.21. Right there. That's the take profit, right? Right up there. Yeah. So basically, it just like went there over the recent few hours. Right? That's the take profit right there. Right? Now, look at how this trade performed. If you got in and this time it fooled around a bit, remember, these are 4-hour candles. So this is over a few days. Within a day, this thing almost went to the take profit. Almost. And then it turned around. Right? And that's when I sent out a warning. If you look in the channels, right, in the server, I sent out a warning that it's still there, the chart and everything. Right? And I said, if you see a conflicting signal, you should probably do something about this. And there was a conflicting signal. So to be fair, many people may have exited right there. It was still green, right? You still got something, 97.74. So it was worth a little something, but to capture the full profit, you would have had to have sit through all of this, which is very hard to do. Like it tried to pop up, more conflicting signals. So again, that's why I say it looks beautiful after the fact. But what you want, though, is to focus on the management, because this thing could easily turned around and went to the stop. That happens a lot. So you want to manage the risk on these things. And if you have some green, there are basically two options you have. Move the stop to break even, okay, which in this case, again, you would have been broken even, or take your early little profit, right? Once it takes out the low of that inside bar, just get out. If you get into the trade and it goes red right away, right, and it's like over here, and you have like an inside bar or something, get out. Don't take the full stop. All right, yeah, sure, you'll be shaken out sometimes, but you shouldn't be shaken out like hundreds of times, right? Because this is a momentum system. If there's momentum, there should be some type of follow through. The next candle after you get in should be in your favor, right? That's momentum. Like it should at least be somewhat in your favor. If you go long, you should see a green candle next, not a red one, right? Or at least one that's moving like further against you as soon as you get in. Like that's not momentum going your way, right? The bot can get faked out. Does that make sense? So you guys follow me on that? Now, let's talk about this one. This is Pfizer. This was trade of the week. It was called today. PFE. It's a stock. So the bot calls coins, of course. It calls stocks and it calls Forex pairs. This is Pfizer. Oh, man. All right. So maybe there was some news on this thing. Let's put the trade on the chart here. So 27.23. All right. So let me go with the stop or the take profit 26.42. All right. So the take profit is over here somewhere. Okay. Doesn't have to be exact. The entry on this thing was 27.23. Man. All right. So it called it basically at the close of that candle. Okay. That's the entry. And the stop on this thing is 27.76. That's all the way up here. So basically, it's the candle, right? It's that size of that candle. This was earlier today, right? That must have been basically the open. And then we get a bullish pin bar. So this is what I mean. This was trade of the week, right? Called short. Now, keep in mind, the NASDAQ and S&P have been pretty strong in recent time. And this thing, I mean, this really is where the short should have been called, but the bot calls it based on the close of the candle. So it calls it here, right? The bot can't see this exactly. Sometimes it calls it near these areas, but sometimes you get these long, elongated candles. Now, let me ask you guys a question. Does this look like a wise short? What do you guys think? You guys who've seen this, right? And if you're on the Trade of the Week email list, you got this in your email earlier today. All right. Who wants to answer that question? Does this look like a wise short? Yes or no? Let's take a look at a daily chart too while we're at it. This is the process that you should go through when you get these, right? This is where it's calling it short. Let's take a look at the daily chart. Let's see what we can see from the daily chart. What do you guys think? Yes or no? Is this a wise short? Stian says no. How come? Why is that not a wise short? You want to give us an explanation? Anyone else? Is Stian the only one listening here? Come on, you guys, don't be shy. Why is this a wise short? Would you guys short this? Yes or no? Stian says no. You could just say yes or no. I'm not going to pick on you guys. Is this a wise short? Come on, one more person has to answer. Not just Stian. I'm going to wait. Come on, you guys. Give me an answer. Yes or no? You could say I don't know too. That's also an answer. Okay. Farkash says yes, it's a wise short. Okay. All right, so let's talk about that. Now, what do I think? If you look at the bigger picture, the general idea looks makes sense. You have a resistance, you have all these pin bars off this resistance, and you get this nasty candle, right? You got a nice, that's not a bearish engulfing, but it's almost a bearish engulfing, right? That looks decent. I like the general idea. This is a lower high, right? I like the general idea. But here's the thing. What I would hesitate with on something like this is it calls it short now, right? And there is a minor support here. So what I would do in this situation, now I'm not in this thing, but I would see if this thing can pop up a bit, right? And maybe give me a better price to short. So the bot gives me a short idea, but I say, you know what? I'd prefer if I can get a better level and then a signal off that level, meaning I'll look for the reversal myself instead of selling, like blindly following this thing and selling into what looks like a possible failed low situation. This candle just closed, right? And it's a pin bar. So if you shorted this thing and you're like, now you got to wait the whole day and this thing may gap at the open tomorrow, right? It's a stock. So I'd rather wait for a slightly better price because this thing calls it after such a large candle. So while basically I agree with both of you, it's not a bad idea to short. This isn't the best price. So if you take this, let's say, so you know what, screw the best price. I'm shorting this thing, right? Because you're hoping that the momentum continues. Then the way to deal with this is what? Anyone want to tell me? I'm not going to pick on everyone for this one. Maybe Steven, you want to tell me? So let's say you guys want to, like me personally, I would wait for some sort of, I would wait for a better price. Okay. Hey, Sam says no. All right. I would wait for a better price. But the guys that are saying yes, it's not a bad idea, but what can you do to mitigate risk? Because this thing can work its way to this level here over the next week, but it may bounce first. What should you do to mitigate the risk of that bounce, right? Because let's say you're like, you know what? I'm in this thing. I don't care. I don't care if it pops up a bit. I'm shorting it. I like the idea. Okay. But it's not the best price. And this thing may pop up a bit and pop back up to there, and it may get you uncomfortable. It may even stop you out before it turns, right? So what can you do how can you take that short but reduce your risk at the same time? Anyone want to answer that real quick? Expect less, that's one thing you can do, but there's something else that you can do. See, Steen, expecting less in this situation would make it like a day trade. And I mean, you can do that, but I would look for this take profit. Like I would still look for that. Let's get another halfway, get another half to go over here, right? It's got to do one of these. But what can I do? Good answer, Karen. Dollar cost average, but no, that's not what I would do here. But you're close. You're close. Anyone else want to take a guess? Well, so Farkash says day trade. You can, like that, and that basically goes with Steven's answer. You can, but not on a 4-hour chart. You'd have to go to a smaller time frame, right? If you were going to day trade this, you'd have to go to like a 5-minute or something like that to see if you can just get a little bit of momentum. See if this thing starts pushing a little bit lower, right, into this area here, something like that, back to that pin bar low, like the low there. That would be cool. But I'm thinking of something else. What can you do? No one said it yet. I'll give you guys one more chance. DCA is close, but that's not the answer. It's not the answer I'm looking for. Good answer, though. Anyone want to guess? Okay, I'm going to give you the answer. Just trade a smaller position. That's it. So if you normally do 100 shares, do 50 shares. On that, so you can basically, I was just thinking you go smaller, and if it works its way up here, if you want to add more, let's say you short 25 shares now, okay? Because you're like, yeah, I'm into this thing short, I like it, I'm shorting it. But you short smaller. If you have to take some pain, then you can at least ride that pain out to a better level, and you're not worried about it. 25 shares. If I have to bang this thing out, all right, So I lose $50, I lose $75, whatever, $100. No big deal. You're not losing thousands of dollars, right? And then when it gets here, if it turns again, then that's where your dollar cost averaging answer would come into play. Don't make the mistake of dollar cost averaging too early. But yeah, the smaller position would be like if one of you guys said the smaller position, that would be how you mitigate the risk. You could still take the trade, you just go smaller. Okay. And if you have the opportunity to add, meaning it pops up and you're like, what do I do now? Well, you can add, but if you're going to add, make sure you get extreme levels, not like a little pop up. You may get like a little thing over here and you be like, okay, that's good enough. And then you start to add too early. And when you do that, that can be very problematic, right? You want to wait for extreme levels, and the market may not deliver extreme levels, but you shouldn't worry because you're still in, right? So if it goes your way, you still make something, right? Does that make sense? So that's really like the key to managing your risk. And you can do the same thing, right, with the other bot trades that come out, right? That's the whole idea. You're using the bot for basically the idea. It's giving you an entry, it's giving you a stop, it's giving you a take profit. But then you could manage it from there based on the information that we could see on the chart, right? So like if we were going to day trade something like this, well, what does a 5-minute look like? We need to know. So let's open this chart up a bit. This is the 5-minute chart, okay? So for day trade something like this, I mean, you're going to be looking at other levels besides those bigger picture levels. That's a resistance. This is a support over here, right? So, I mean, those are your day trade levels. This market is closed now. So this thing may gap lower tomorrow. It may gap higher. Your other resistance levels, right? You're looking at like way up here. So it has a lot of room to jump up and shake a lot of people out, right? And it may form some new levels in here during the process, right? But this right here is a completely separate mindset or separate strategy compared to this. Right? You cannot treat those the same. Does that make sense? You should think each time frame has its own parameters. Don't mix them. It's a bad idea, especially if you start on the smaller time frame and then you're like, oh, I'll go to the bigger time frame now. Don't mix them. All right, does that make sense? All right, so good answers, you guys. Good answers. All right, so let's go back to Bitcoin. So we covered a lot of stuff here today. We covered the general game plan for Bitcoin, and we went over some trade management. Look at that pin bar. We went over the trade management for some of these trade scanner trades. It's important for me to make you people aware of how best to use that trade scanner, right? Because it does deliver a lot of value. It's just I don't recommend following it blindly, right? So it helps if you can manage the trade. Where I think the trade scanner gives the most value is in teaching you how to manage the trade, because it gets you in and now you have to manage it. Instead of having to worry, where should I get in? Is this a level? Where should I put my stop? Where should I put my take profit? Like the bot gives you all of that. So you don't have to worry about that. All you have to do is manage it, right? Is this thing going my way? Is this thing going against me? Is this thing giving me a conflicting signal? Where should I manage this? Where should I cut my risk? I don't have to take the full stop. So where should I get out, right? Like if you can come up with those answers, right, based on the information on the chart, then the trade scanner can be a very valuable tool. And there'll be times where you don't even have to do any management because it goes straight to the take profit. There'll be times when it can go straight to the stop. So, but there are often times where there are opportunities to get out before it goes to the full stop. And that's the key. If you can reduce that stop, but then you're capturing these smaller profits and these occasional larger ones, you're accumulating them over time, and you're basically you're preserving the capital in your account. You're conserving your capital because you're reducing what you lose. That's a very key aspect of all of this, whether you're a day trader, a swing trader, even an investor. But it's a little more, it's not easy. That's not so easy to do as an investor because you're always in and you have bigger picture stuff to deal with, but it's especially important for the smaller time frames. Does that make sense? Okay, you guys. So good. This was cool. All right, I'll take this trade off now. So again, if you guys want trade of the week, remember every week it rotates. This week we got a stock. We got Pfizer. So next week it's going to go to a Forex pair. All right. Every week Every week it rotates. Okay. And the week after that, we'll go back to a coin. All right, let's go back here. And let's just go to the 4 out. Let's go back to the daily chart. So, and again, if you guys want to be part of my student meeting, I'm doing an open house. Like I said before, it's an open house. It's on Thursday at 3:30 p.m. Eastern time. And this is usually normally reserved for members of the community, but I'm doing an open house and I'm going to talk more about trade management and algos in general. Okay, what types of algos are out there and how to utilize them and make them part of your strategy, and are some of them worth it? Like, what are some of the tricks people use to trick you into thinking that the algo is something that's going to make you rich? Meanwhile, it's not, right? What are some of the tricks that they use? I'm going to tell you. All right, anyway. All right, so any questions, you guys? I think this was a pretty good session. Yeah. Any questions real quick? All right, so you guys know where to find me. Check the links in the description. Join the community. All right, there's the Discord community. There's a free area there. A lot of great conversation. Alex puts a lot of interesting information in there. Right, he's one of the moderators, and there's a lot of good stuff in there. Also, I encourage you, try the free trial. 1 week free trial with the trade scanner. You get all these signals in your email. Soon, I'm going to be able to share my own signals again. In a much more efficient way. Steen is still working on that. He hasn't been feeling well, but now he's getting better, and we're going to get back on schedule. All right. So again, there's more and more things coming. We have more things in the pipeline. It just takes time for us to get them out. But I encourage you, check out the free trial. Let me know what you think. You can cancel it anytime. It's very easy to do. I'm not trying to rob you. Okay. Anyway. All right, you guys. So, any questions? Any questions real quick? I hope to see many of you at the student meeting on Thursday. You'll have another opportunity there to ask me questions specific to trade strategy. Come up with some questions. Also, you guys that are in the community, if there are any stocks or any charts that you'd like me to cover, basically for me to put on my list, let me know what they are, and I can share them via the notes that I've been sharing. Right? Like if you want to see, I never see Litecoin. Okay. You want Litecoin? Let me know. And I can put that on my list and say, okay, today I'll do Litecoin because this guy has been asking about Litecoin. Right? I want to be able to provide things that you guys can find useful. All right. Okay. So anything else? I don't see any questions. Any questions? All right, cool. So join me for the student meeting on Thursday. Just sign up for the Trade of the Week email, and I will send you the invitation early on Wednesday, and you'll be able to register then, okay? That's how you'll get there. All right, everyone. So everyone, enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.